Connect with a corporate voice. We've got Ramesh Iyer, MD and VC at Mahindra Finance here, joining in to talk about the healthy November disbursements. Thank you so much for taking time out. To begin with, what is the outlook for the December quarter, given that 2 months now have passed in terms of your overall disbursements?
Yeah, so clearly, we had a great festival season of October, where we clocked about 5,000 crores of disbursement. And in November, we again saw close to that number. We saw 4,500 plus as disbursement. And I have said this before that the demand holds up, and we do see traction at the dealership is very high. And therefore, we continue to see the positive outlook from the rural market. And we were, hopeful of crossing 10,000 crore for the quarter, which we have almost clocked already in these 2 months.
Right. Ramesh, how do you see stage 2 and stage 3 loans in the next 2 quarters? And can further improvement be expected in the coming quarters, you think?
So clearly, that's the trend we are seeing. As I just said, the collection efficiencies have been very good. And we believe that we are now sub 7% as gross NPA and sub 3% as our net NPA. And we do believe that you will see further improvements to this. And we are hoping that do we close at 6% or so as gross NPA as we go along.
The likely trajectory for NIMs and Opex?
So the net interest margins have remained a little subdued because the borrowing cost has gone up much faster than expected. But we have passed on about 50 basis points to the consumers through our lending rate increase. I think we still remain 25 basis points uncovered, and therefore the net interest margins will be at the range that we saw around September. But over the few quarters, you will start seeing that improve with the passing on of the borrowing cost. So far as the Opex is concerned, we are investing into little of our future. We are investing heavily in our technology space. We are heavily investing in people training, etc. And therefore, it may remain a little elevated, though currently, which is at about 3%. We do expect that this will come down below 3% in the next couple of quarters. But our aim is to bring it down to 2.7 as the productivity starts to improve after all investments are made in the future requirements.
Hi, Mr. Iyer. Good morning. Now, the second half is, always considered to be seasonally strong for vehicular sales. What's it looking like so far?
We are very, very positive as far as the second quarter is, the second half is concerned. And you have seen first 2 months of this third quarter that we have already clocked close to 9,500 crore plus disbursement. And as you rightly said, the demand in the second half, that is post-festival, the tourism, the wedding season, everything happens during this period. And the demand always holds up very, very high, and it's been historical. We are very confident that after 2 years of the COVID pressure, we are seeing demand back to beyond normal, and the trend and trajectory is the same. So you will see aggressive disbursement growth happening, as well as overall collection efficiencies holding up because of excellent cash flows coming both through farm and the infra cash flows.
Mr. Iyer, how sustainable is it in terms of your disbursal growth and your growth levers going forward?
We would very strongly think, and we are investing into that. We are investing in our channel, we are investing in our people, and we believe that the demand will hold up. And these inflationary trends should not have a direct impact on the demand for vehicles and tractors, is our belief.
Ramesh, lastly, is your book well provided and no surprises expected? Can we really take that on record? And also, is there any impact of third-party ban on recovery proceedings by the RBI?
No, so clearly, as far as the repossessions, which was not allowed through external agencies concerned, and we have said that that repossessions are a necessary actions for any finance company. But because it was the festival time, this is at the good cash flow time, normally the repossessions are also very, very low. And therefore, it has not had any direct impact as far as these quarters are concerned. But we are very confident that going forward with all process corrections and changes that we have brought to our approach, we would get necessary permission going forward, and we would resort to repossessions wherever required from highly defaulting customers. But for specifically to these quarters, we have not seen any major impact.
Sanjeev Bhasin joins us now.